My next guest is betting these trends will last, and he's making a very bold call on Macy's, saying it could rally at least 90% from here, but it's not for the faint of heart. With us now is Omar Saad. He's fundamental research analyst with Evercore ISI. Omar, welcome. A lot of love here. What do you think are the big story is?
Thanks for having me. Yeah, I mean, I think you kind of nailed it on the head. I think, number one, stores aren't dead. If anything, in the soft lines universe and fashion world, if you will, omnichannel is continuing to prove to be the winning business model long term, one that combines obviously digital and stores, and companies like Macy's, I think, are finding an increased relevance in the marketplace. And, you know, there's been some ancillary benefits as we've gone through COVID with tight inventories and strong demand recovery. We've also seen strong margins out of department stores such as Macy's. And yet they're still trading at extremely low valuations, 6 times the current year earnings, if you will, or actually the year that just ended earnings implies that the market expects earnings to fall in the future and not go up. And we actually think there's been a lot of changes in the department store sector, and earnings have as much of a chance to rise and perhaps even significantly, and which means the multiple could expand as well.
Well, the multiple is sitting around 6 right now, and the stock's around 25. Do you truly think this could be a 6 or 7x performer? I mean, how do you get to that scenario?
Yeah, I mean, look, I think it's a little bit of an illustrative exercise, but it has that kind of potential and these really big, chunky opportunities. And we kind of broke them into 4 buckets. Real estate monetization, as you may know, Macy's owns or effectively owns a lot of its real estate. And Macy's is also rolling out really interesting other digital-related services like advertising services and 3P marketplace business models, leveraging its extremely high web traffic, you know, in a lot of the same ways that Amazon and other internet companies do. Not only are those profit opportunities, but I think the multiple for the stock will expand as they become a little bit more and more like Amazon in a way. And then, of course, we think we're still in a recovery from COVID, and there's still a lot of pent-up demand out there for fashion and apparel as the life returns to normal, and that core Macy's older customer, you know, still hasn't yet to fully return. So we think there's a number of near-term and structural opportunities here.
But basically, in order to get the stock to go, over $100 a share, you'd basically have to see them sell everything they own, right?
Well, yeah. I mean, on paper, we did an analysis that shows, Macy's theoretically could monetize its own real estate in some sort of sale-leaseback transaction with a REIT company and raise as much as $7 billion in cash up front in exchange to pay a rent of $550 to $600 million a rent expense longer term. But, to put that $7 billion cash raise in perspective, the entire market cap of the company is around $7.5–8 billion. So one could buy back a significant percentage of the outstanding share base with that kind of capital raise. Now, some sort of massive sale leaseback transaction like that hasn't ever been done, as far as we know, in our space. But, with private equity and other firms, activists and suggestivists looking at these really low valuations and the arbitrage between REIT valuations and department store valuations, it's an opportunity that becomes more attractive, I think, to investors.